Why does your severance paycheck sometimes get taxed at a higher rate than your regular paycheck? The answer lies in how your employer decides to classify that payment, and unfortunately, you have zero control over it. Your employer can classify your severance in one of two ways, and this makes a huge difference in how much gets withheld from your check. If they treat it as supplemental wages, they'll automatically withhold 22% in federal taxes. But if they treat it as regular wages, especially if you get it in one big lump sum, your payroll system might think you're making bank every pay period and withhold taxes as if you're in a much higher tax bracket. Let me paint a picture for you. Let's say Mike typically makes $4,000 per month. His company gives him a $24,000 severance payment in one lump sum. The payroll system sees that massive check and thinks, wow, Mike must earn $24,000 every month, and withholds taxes as if Mike is earning $288,000 a year rather than his actual annual income. Now here's the important part. The withholding rate isn't necessarily what you'll actually owe. You might get some of that money back when you file your taxes, or you might owe more depending on your total income for the year. But the part that really stings is that a big severance payment could actually push you into a higher tax bracket for that year. If Mike was already close to the edge of his current bracket, that extra $24,000 could mean that some of his income gets taxed at 24% or even higher instead of 22%. And it gets even worse. A higher total income might make you ineligible for certain deductions and credits you might normally qualify for, like the earned income tax credit, student loan interest deduction, and child tax credit. Have you ever been surprised by how much was withheld from a bonus or severance check? Share your experience in the comments. You're definitely not alone.